Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now, you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back again to another edition of All Things Financial. What we're starting to do with this show that I air every week on WWNL AM 1080 at 8:30 a.m. to 9 every Saturday morning is share this show with all of you who are on our subscriber list for our emails. And the reason we're doing this is I'm trying to share information that we have accumulated during the week, from week to week, or come across somebody with a problem, solution, different difficulties, or different opportunities that we find, and we want to share it with all of you listeners. So that's why we do the show initially, and that's why I decided to share the show even further now with all of the subscribers on our email list. So let's begin. We were actually starting to get into the last couple weeks the discussion on all the different forms of life insurance that are causing people problems in, are your life insurance policies from long ago healthy, or are they financially sick? And some people have a situation right now, a lot of people actually, where their policies are being set up to non-renew over the next 5 to 10 years without your knowledge. So let me share with you what exactly is going on. The life insurance industry has a number of different popular products. Term insurance is one. The other one is universal life insurance. The third one is what's a hybrid called guaranteed universal life insurance. And the fourth one is really universal life insurance. Now, each form of insurance has its own advantages and disadvantages. Term, the major advantage with term insurance is its inexpensive cost for a large amount of death benefit. Again, any form of life insurance, the death benefit, if made payable to a direct beneficiary, not to your estate, but if you actually name beneficiaries on there, and those beneficiaries are individual people, the death benefit is paid income tax free. Now that's important to know, because if you set your life insurance policies up properly, it doesn't matter whether it's term insurance, universal life, whole life, guaranteed, or even group life insurance at work. Life insurance death benefits are paid tax free. So it doesn't matter what form of insurance you have for the death benefit to act to accord with your goals and your wishes. So why all the different products then? Well, normally it's because of more living benefits that people want as opposed to just a death benefit. What I mean by that is some people like to build up cash value. Some people like to use life insurance as a savings vehicle. Some people like to use life insurance for their whole lives to have death benefit protection, where other people like to use life insurance just to cover a loan until the loan is paid off. So which form of life insurance do you use depends on what your goals are and what your needs are. If I have a client who comes to me and says, I have a business loan and it is $250,000, it's on a 5-year schedule. It'll be paid off in 5 years, and I need life insurance to make sure that that loan gets paid off. If I don't survive the 5-year period, I don't want to saddle my business with that loan. Then we buy, in many cases, a 5-year term life insurance policy, which would be the least expensive way in most cases to satisfy that need. We don't need, in that case, long-term life insurance, the more expensive forms of life insurance, or cash value build-up life insurance. Now, I might have another situation with that same business owner in his next request to me, and it might say, if something happens to me, what happens to my business? And I'll say, whatever plans you've made are what are going to happen with your business. And he'll say, maybe, I have no plans. So my first recommendation in that case would be different. It would be, let's do some long-range planning and short-term planning. What happens if something happens tomorrow or 20 years from now? And finally, what is your exit strategy out of the business if nothing went wrong and you're just ready to leave the business? In almost all of those cases for the business owner, that leads us to a buy-sell agreement with an attorney drawing up an agreement, and then us buying life insurance so that in the event the owner dies prematurely, we have the cash from the life insurance paid to a beneficiary, which is the buyer of the business, or to be able to buy the business from a spouse, let's say. And we might actually make the beneficiary the spouse directly and have the buy-sell agreement transfer the business seamlessly to this already determined buyer. So it can be as complicated using life insurance or as simple as we want to make it. Now, for everyone who has a life insurance policy now, we have a situation. And the situation is the life insurance policies that are in existence, some are not financially healthy. Others, we're finding, are doomed and destined to run out of money shortly. Others might take 5 or 10 years. And we have other cases where the total opposite is true. They are overfunded, extremely healthy, and in fact, cash rich. So what do you do with each? Well, the first thing is we do a financial audit, a life insurance policy audit on every policy that exists today, including term life, to see how healthy they are, how healthy the policies are, how appropriate they are for the original needs that you had, and how appropriate they are now that your needs may have changed. Are the forms of life insurance you first purchased still the most appropriate for your new, already having changed needs? So we look at this as a life insurance policy audit first off. We look at your group life at work. We look at your term life at home. We look at your universal life, your whole life, and your guaranteed universal life. Match those up to your goals and needs today. See how it compares with your goals and needs when you first purchased the insurance. And see as an overall package, number one, is it most appropriate for you? Number two, if you didn't have any life insurance now, are they the same types of policies you'd buy back again? And number three, are the policies themselves still healthy? That means the cash value side of it on a cash policy, but it also means the quality of the company that writes the life insurance. So somebody might say, why are you doing a policy audit on a term life insurance policy when there are no cash values? And we'll in turn respond, we need to check the financial health of the company to make sure the company is as strong as it was when you first bought it and as strong as you would require it to be going forward. You want to make sure the company is there for you 20 or 30 years from now, by the time that policy expires, that they're still as strong as they were. And on the cash side of the policies, to find out if it's a cash rich, cash poor, or somewhere in between policy. So that's what step number one is on any existing life insurance, is we first do a life insurance policy audit. Now let me take a quick break. I'll let you get pens and papers for those of you listening on the radio live. And when I come back, I'll help share with you how to get this life insurance policy audit I talk about and what to do about it once it's received. So I'll go through the steps for you. All right, let's take a quick break and I'll be right back.
If you're a business owner or an independent contractor, you know the cost of doing business. You have your equipment, your personnel, advertising costs, and doing everything you can to outdo the competition. But do you run your business, or does your business run you? Your business is truly an investment. Is that investment insured? Jack Driscoll is here to help. At Driscoll Insurance and Financial Services, he provides complete business planning services ranging from property insurance programs to disability, life, hospitalization, and long-term care programs. He not only designs insurance protection plans tailored for your business and protects what is already built, but strives to strengthen your business through providing employee benefit and group programs. It's through this unique combination of skills that Jack has become a valuable resource for business owners and managers. Educate yourself first by going to DriscollFinancial.com and clicking on Business Insurance, or give Jack a call at 412-833-1500. Your business and your employees need you to be prepared, and you need to be protected. Log on to DriscollFinancial.com or call 412-833-1500. Driscoll Insurance and Financial Services. Insure for today. Invest for tomorrow.
Okay, let's get into the situation on how to do a life insurance policy audit. It's very simple to do. What you can do is draft a short note and send it into the insurance company with your policy number on the letter. And what you're asking for is this: please send me an in-force policy illustration. And it's that simple, folks. So regarding every policy that you have, you send a separate request for them to send an in-force policy illustration. Now, here's what we're looking for. We're looking for any cash accumulation will be shown as a guaranteed side, and it's called the guaranteed cash value table, and a current assumption. Sometimes they'll say projected, but normally it's current assumption side. And what you're looking for is what those two columns look like on your ledger. You'll see cash value, you'll see the premiums paid, and you'll see the guaranteed, which is somewhere in between. Now, first, look at the cash value guaranteed column. If you see those numbers showing cash value in your account shrinking and then going to zero, what you need to see is the year they're going to zero. If it's when you're 98 years old, it's way different than if it's 5 years from now you're seeing that go to zero. If you look at the current assumption side, you'll typically see the cash values lasting far longer. Although I have seen a lot of policies, they'll say the cash value is going to zero in 5 years or 8 years on both the current assumption and the guaranteed side. Secondly, what I want you to look at is the death benefit column. You will see, especially on a guaranteed universal life policy, cash values ending very early in those contracts. That does not mean that's a bad thing. If you look at a guaranteed universal life policy, they're all set up to run out of cash very fast. They're really scheduled as a permanent term alternative of insurance, because most term insurance is 30 years, 20 years, 5 years, but no longer than 30 years, and it expires. So the life insurance industry came up with an alternative to that, and the alternative is guaranteed universal life is a death benefit usually guaranteed to age 100 or even age 120. And the benefit there, if you look on your ledger, your in-force policy illustration, I need you to look at the death benefit side on the guaranteed column. You will probably see the cash value runs to zero very early, but the death benefit says the same amount of death benefit every single year after that. That's way different than if you're looking on a universal life policy. If you look on a universal life policy, when the cash value goes to zero, you will typically look at the column on death benefit also goes to zero. So you have to know how to read these things. It's easy to request them, but it's not easy to read them. So it's very easy to misdiagnose the policies. Get to a professional financial planner, as opposed to a life insurance only professional, can sometimes make all the difference in helping you evaluate your overall financial needs, including your life insurance, rather than only your life insurance needs, disregarding the rest. And the reason I say that is when we get to the cash value rich policies, the cash rich policies, you'll want to be talking with a financial planner. But even the easy differences here: term insurance, zero, cash value all the years. And again, it doesn't make it a bad policy at all. Guaranteed universal life insurance, 0 after the very early years. And it again doesn't make it a bad policy for you, because the death benefit, which is the purpose you bought it, probably lasts equally as long as you wanted, or maybe even longer. Maybe even up to age 120, that death benefit lasts. The universal life policy, however, is more complicated. When you see that go to 0 on the cash value side, typically the whole policy went to 0 and the whole policy canceled. That can be a dangerous situation for those of you who are holding older universal life insurance policies that are not healthy. And the only way to find that out is to get the in-force policy ledger, or in-force policy illustration, as it's sometimes called, and look for yourself, what does your policy look like in the future? Now, a lot of you will say, I already have an illustration when I bought the policy. Why would I need to get an in-force policy illustration, or even do this so-called life insurance policy audit on a policy that I already have the ledger for when I first bought the policy, especially on a universal life? The answer is this: your original illustration was most likely based on a cash value, higher interest rates being earned on those cash value accounts than we can possibly attain today. You'll see some of those illustrations when you first bought your policy, illustrated at 8 or 9 or even higher percentage every year. And if that interest rate is not being achieved, and the interest rates now might be 4 or 5%, then maybe that policy has become unstable, because universal life policies are a delicate balance. They're very fragile if the cash value accumulations do not at least equal as high as they were first initially projected, then the policy could be in jeopardy. You need to know now, and earlier is better than later. Some of you listening to the show already, if you do a life insurance policy audit, it may be too late to fix it. It might be because you're too old now, or you weren't too old before. It might be because of health concerns and considerations that you have now that you didn't have before, which is all the more reason why I prompt all of you, especially those of you young enough and healthy enough that have a universal life policy now, that if you find there is something wrong with it, and it's better to find out sooner than later, that you still have the ability, capability, medical health to qualify for something rewritten that is in a better financial situation, and you can even roll over the cash in your current policy and save part of that cash toward a new, more healthy policy if that's what your needs determine. Again, contact a certified financial planner is my recommendation. Get these policies looked at by that competent professional and evaluate the form of life insurance and the health of your current contracts. I run across many contracts that are healthy, do not need adjusted, should not be rewritten, should not be touched in any way. So you need an ethical planner and an ethical practitioner who's not just looking to replace everything. So be very careful who you trust to do these life insurance policy illustrations for you, these in-force illustrations. We don't want someone doing them solely for the purpose of, let's replace this life insurance with a new life insurance policy. And here you got rid of an otherwise healthy policy that maybe an unethical or unscrupulous agent made sound like it was not good. You also don't want to make the mistake of being afraid of life insurance agents, so not getting it checked at all, where an ethical life insurance or certified financial planner would have been able to analyze and create a good situation for you out of a maybe not so healthy one you're in right now. The difference is finding the provider that you could trust is looking out for your interests first and will tell you the truth if your policy is good or if your policy is bad, and then act on that information objectively and impartially. Okay, let's take another break, and I'm going to get back to you with a little more details on what to do actually once you find out the answers on whether you're healthy or not. We'll be right back.
Somehow we convince ourselves that life will get easier as we get older. Unfortunately, that rarely happens. We have a lot to consider when it comes to our retirement, our assets, and our health. And what happens when we pass away or when we can no longer do for ourselves? At Driscoll Insurance and Financial Services, Jack has the knowledge and the years of experience to guide you through all the different options available. Learn about ways to help prevent your assets from being depleted by various sources, including nursing home costs, or establish a legacy account that allows you to provide for your loved ones or to a favorite charity for years after your final rest. Call Driscoll Insurance and Financial Services at 412-833-1500 or visit his website at driscollfinancial.com. You're creating a legacy by living your life. Let Jack help you plan for your legacy to benefit others for a long, long time. Call 412-833-1500 or log on to driscollfinancial.com. Driscoll Insurance and Financial Services. Insure for today. Invest for tomorrow.
Okay, now you've gotten your in-force life policy illustration back, and now what do? We've looked at the cash value table. We've looked at the death benefit table. Now what do? First thing, I have seen some of your policies that you get life insurance policy illustrations on that are healthy. So what I want to do is share with you how to tell whether it's healthy. If you bought the insurance for a long period of time, and let's say you bought a universal life policy, and you bought a policy that you wanted to outlast you, which means last forever in your mind, then you need to find a cash value on the guaranteed side and a death benefit that lasts at least to age 100. You and I both know a lot of people that have relatives living well into their 90s. So if you bought life insurance to make sure it is there for you when you pass away, not if you pass away before a certain time, and you bought term insurance, you bought the wrong kind of insurance possibly. Universal life insurance, you may or may not have bought the wrong type of policy, depending on where those guaranteed cash values and death benefits expire. If they last at least to age 100 on your new in-force policy illustration you received, you're probably fine. Your policy is probably healthy. Now, the next thing you do is you go to AM Best. What we're doing is checking the financial rating on your company. So what you do, you Google AM Best, B-E-S-T, and you get a financial rating on the life insurance company. Please remember, some companies have a number of names. So they'll have Massachusetts and New York Life, and some of them are in Texas, and you'll see like Travelers Insurance has 8 or 10 different company names, all Travelers Insurance, State Farm, Erie, it doesn't matter who it is. You'll want to match the company name to the name on the policy contract on that in-force, that new in-force policy illustration. The reason I say the new in-force policy illustration is your company names may have changed from when you first bought the policy. Either the company itself may have been bought out, or the company may have restructured inside their own corporate headquarters on who handles each life insurance contract. So you want to check the life insurance provider name that matches the new in-force policy illustration. Now on the AM Best rating, we are looking for A+, A. We don't like to see an A-. So if you see a policy and on your illustration it lasts to over age 100 on a universal life contract, for example, and then you look at the company rating, which is my next step actually on the policy audit, and you see an A- or a B+, I'm a little worried, as more than I would be with an A or A+. Why? I'm looking for the strongest financial company I can find as my partner to provide my spouse and my business and my survivors and my heirs the financial security that I no longer can provide, which is why we bought the insurance. We, in essence, transferred the risk from our own selves to an insurance company to bear the risk for us when we pass away, that they will be there to pay out that money. So it's very important the financial strength of the company will be able to outlast us and be financially sound at that time. So that's the second stage of the life insurance policy audit. So very simply today, what I've covered is how to do step one when you have existing life insurance policies, which is the life insurance policy audit. It's a health exam. We're looking to find out if you have cash-rich policies, cash-poor policies, financially strong companies, financially weak companies, inappropriate policies for your current financial needs, or maybe inadequate limits on the policies that you have, which you bought maybe 20 years ago, and the limits of insurance you had then were more than adequate. And those same limits today are greatly inadequate for your current needs. So that's what we're doing, folks. We're doing a total life insurance policy review. I wanted to teach you how to do step one is to first get a life insurance policy audit. Now, step two we'll get into next week. That is programming your needs. We will talk about how to program your life insurance needs, how to figure out how much life insurance you need, or if you need life insurance at all. There are many people who buy life insurance just because they think they're supposed to own life insurance, and in my judgment, don't need life insurance. There are other people who have group life insurance at work, which sounds like a big number, $100,000, $200,000, more than enough to pay off their expenses and be able to handle their final expenses also, pay off their bills and their mortgage, and are leaving their heirs with no income. So they've woefully inadequately provided for life insurance, thinking that number that sounded so big would be more than adequate, and after the bills are paid off and the burial expenses are handled, they've really left their family with nothing. So we'll get into all of that on programming insurance needs on next week's show. Thanks again for tuning in, and we'll be back again next week.
You've been listening to All Things Financial with your friend with the answers to all financial matters, Jack Driscoll of Driscoll Insurance and Financial Services. Securities and investment advisory services offered through SagePoint Financial Incorporated, a registered broker-dealer and registered investment advisor and member FINRA and SIPC. Driscoll Insurance and Financial Services is not affiliated with SagePoint Financial, Inc. or registered as a broker, dealer, or investment advisor. You can reach Driscoll Insurance and Financial Services Incorporated at 412-833-1500, and they are located at 2738 South Park Road, Bethel Park, Pennsylvania, 15102.